Excellent. It's set up to automatically record. That's what I was
Yep.
trying. Okay. Welcome, everyone. The webinar will begin in approximately 3 minutes. Thank you for joining us. Good morning, everyone. This webinar is being recorded and will begin in approximately 2 minutes. Thank you. Good morning, everyone. My name is Toya Hemingway, and I am chapter chair here at SCORE Chicago. SCORE is a national nonprofit association dedicated to helping small businesses get off the ground, to grow and to achieve their goals through education and mentorship. We have been serving the needs of business owners across the country since 1964. Here at SCORE Chicago, our mentors are experienced entrepreneurs, corporate managers, and executives with backgrounds in a diverse set of industries and specialties who volunteer their experience and knowledge to help small business owners start, develop, and grow their businesses. We offer free and confidential mentoring on a free or as well as low cost basis, and training and free online workshops, in addition to numerous templates and tools on our website. If you're interested in being mentored, please go to score.org and submit a mentoring request. As mentioned before, this webinar is being recorded, and slides and the recording will be available to participants later this week. Now, it's my pleasure to introduce today's presenter. Lentandella Paulo, I always mispronounce your name, I'm so sorry, is an immigrant from Angola. He's a Pan-African global citizen and an entrepreneur. He has an MBA from Eastern Illinois University and a bachelor's degree in accounting from Michigan State University. He is a CPA and has Series 7 and 63 licenses. Series 7 is investment banking, 63 is uniform securities state law, and accreditations. His experience spans consulting, accounting, and assurance, fund administration, investment banking, quite a bit. Paulo had financial accounting responsibility for more than 12 funds with a combined asset under management above billion, manages deal flow totaling $90 million in capital raising efforts, and oversaw M&A transactions with more than $100 million in expertise value. He is a member of SCORE Chicago, and a board member of the Cancer Support Team, a nonprofit organization. He's also very active in the community as well as multinational interest. So he enjoys cooking, playing soccer, creating educational content for his YouTube audience. I don't know where he finds the time, but thank you very much for joining us today, Paul. I will turn it over to you.
Thank you, Toya. Thank you so much. Again, I want to welcome everybody for sparing an hour or an hour and a half to joining us today with SCORE. And I'll be your presenter today. My name is Lunta Dila Paulo, as Toya mentioned in the introduction. I am originally from Angola. I have been a U.S. resident for over 3 years now, but I've lived in the US for over 10 years. I came in the US as an international student, and I did all the right things in school. And that gave me a lot of resources and opportunities to pursue what I enjoy doing today. But my background really helped me to develop one essential skill, that is helping small businesses succeed. I have learned several skills in the corporate America by working with leading companies in our country. And I use these skills today to help small businesses, whether it's from tax compliance, tax saving perspective, or from helping them create a business that will allow them to one day retire peacefully with a little bit of money for their retirement. So that's a little bit of what I do. But for today's presentation, if you are seeing our screen, please just enter into the chat yes, so that we know that everything is working okay for you. And then I'll move forward. Before we begin our webinar, I would strongly recommend you to get a notepad and a pen, right? Almost every workshop, I have a pen so that I can make notes of questions or anything that we're seeing from the chat so that we can follow up later, okay? So as we start our webinar, right, this is what my attorney said, you really have to put a disclaimer there for all of your webinars or teaching. So I'll throw this here. This is for educational and information purposes only, right? This is not illegal, a tax, or a financial advice. This is to help you have better information so that you can make better decisions, okay? So let's jump into our webinar today, right? I'll start with Albert Einstein's famous quote, right? Okay, let me take that back. Not sure if it's 100% Albert Einstein who said this, but this phrase is assigned to Albert Einstein. It says, the definition of insanity is doing the same thing over and over and expecting different results, right? In my years of helping small businesses, helping individuals, whether it's to save money on taxes or to be tax compliant or any other business decision, often small businesses repeat the same mistakes or follow the same patterns because it's human to follow patterns and not to break them, okay? Often I see people leaving other accountants and coming with the problem that I believe they had for several years, right? Whether the problem is filing their tax returns late or not paying their tax balances on time, and building a large tax bill, and then we have to go into tax resolution to help them negotiate with the IRS, or whether they file a tax return and then they forget to send another W-2 for another job they had during the year, or a 1099, which is the most common that people leave out. Or during our conversation, they discover that they didn't take advantage of certain tax deductions or tax credit, right? So this webinar, it's really to help you not repeat this over and over and expect to not have the same problem that you currently have, okay? So this webinar, it's really organized to help you achieve three things, right? By the end of today's webinar, you should be able to better organize your personal and business affairs so that the tax season is slightly better than you had last year or the year before that, okay? The number two goal is to help you develop an optimal tax compliance strategy, right? So that you are not leaving your tax situation to your tax preparer or tax professional. Because guess what? To the IRS, the person who is responsible to your tax compliance is not your CPA, is not your tax preparer, is not your tax advisor. Guess who is? It's you, right? If something is wrong on your tax return, they're not gonna call your CPA, okay? They're not gonna send a tax notice to your CPA or your tax preparer. They will send it to you, and then you'll figure out a way to deal with it. So how do you learn to create a system that allows you to make sure, even though you're not a tax expert, but you are keeping up with the tax law, you know at the high level what should be happening on your tax return, okay? What should you be seeing inside your tax returns or not seeing as well, okay? And then the last thing we'll be helping you today is to develop practical steps to avoid legally significant amount of taxes and especially avoid late filing penalties, interests, and other fees. And the reason this is so important to me, it's so dear to my heart, it's because today in the US, people do not have enough savings to help them lead the type of lifestyle they would love to live or enjoy, okay? And most people, this is according to various polls, most people over 50 years of age do not have enough savings for their retirements, right? We are seeing more baby boomers going into retirement without having enough assets for their retirement time, okay? So one of the things that I do with clients is to help them understand, if we can save you a little bit of money, we do not want you to spend that money right away. We want you to use the tax saving to build your net worth, net assets, and so that one day, right, down the road, you can have a little bit more money, right, than you could have if you spent your life paying it on taxes. Okay, so that's a little bit what we're trying to communicate here with you today, right? So the other benefits of you staying with us in today's webinar is, number one, avoiding to pay taxes more than you need to, right? Here's what all of us do every tax season, right? I'm a tax professional. I'm helping clients in this tax season, right? Clients come and guess what? They get a refund, right? And a lot of them are happy. And I'm not happy. And I'm telling people, hey, look, we made a mistake here, right? And some of you already know this and will empathize with this. And I need to tell this to people because none of us can go to a bank to borrow money and the bank is not gonna charge any interest whatsoever on it, right? And that's essentially what most people do in the US, right? We give the government money, hey, use this money for 1 to 12 months of the year, and then we'll take it back at 0% interest, okay? Not even the SBA that supports small businesses provides loan at 0% interest, okay? So when you're getting a refund, you're not actually making sound economic decision. Sometimes it's better to owe or bring your tax bill as close to zero as possible. That's the goal, right? So you need to learn how to do that or how to work with your professional to make sure that goal is achieved. Because if you get a $10,000 refund, okay, every year, if you didn't overpay and put that money into the S&P 500, every year you'd have a return of at least 12%. In 10 years, that's how you are wasting your wealth building opportunity, right? So I want you to be really mindful about the economic choices that you are making, right? So this webinar is going to help you understand that it's important to avoid overpaying, avoid late filing penalties and interests because they eat up on your ability to build wealth, to create a lifestyle you desire to have for you and your family. But also I want to give you tools so that you can gain confidence that you are doing the best possible. You're taking the best steps possible to be tax compliant and avoid the negative side of the tax law, right? And a lot of people don't know this, but if you're not tax compliant and you are filing fraudulent tax returns, you can actually go to jail for this, right? It's that serious. I've had people come to my practice, and this is why we do this. Every time someone comes, we have to review their last 3 years tax returns, right? To make sure they have been compliant or close to it. If they aren't, we need to amend their tax returns because we don't want to work with people who are breaking the law and causing, and eventually this could be a problem not only for them, but also for us, right? But more importantly, if you're tax compliant, you don't have to live with the fear of the IRS, right? The fear of taxes and the fear of the IRS is today one of the top 20 fears Americans live with. It's unacceptable, and this is not the way to go with life, right? And I want you to start living with peace of mind, knowing that once you file your tax return, it's materially accurate and you don't have nothing to fear. Even if the IRS comes with an audit or looking into your finances, there's not gonna be a single area that will make you wonder whether or not you followed the rules as they should be, okay? So that's what we're trying to do for you today. What are you gonna be getting from this webinar? We have 3 gifts for you, right? Number 1, it's gonna be a free booklet that includes a 10 easy to implement tax strategy to help you reduce your tax bill. And number 2, it's gonna be, I have an accounting for small businesses and side hustles course in Udemy. It's also gonna be available for you. And if you'd like a consultation with me or someone in my team, it's gonna be a free 20-minute consultation as well. So that's what we are gonna be giving you at the end of today's webinar, and this is just a slide of what these look like, okay? So we're gonna be benefiting the most from today's webinar, right? Certainly, all taxpayers are encouraged to stay and learn what we have to share today, but people who will take the most value here are small businesses, solopreneurs and individuals with investments, right? Because today's webinar, it's really designed to help you maximize your tax compliance as a business owner or a professional or an individual with a side hustle or an investment, okay? Um, but also the other thing we try to do when we're preparing these webinar is to provide general guidance for other taxpayer about things that they really need to know about getting these tax season in making better decision in these tax season. Okay, so I'm gonna skip my background. It, it's gonna be there on your slides to read, but let's just go into some stories about real life people and how taxes is so important and affects everybody's life, okay? The first story is from a client of mine who is a professor at the University in Michigan, and his wife is a real estate agent, right? Every year they would owe taxes to the IRS, and they barely had money to invest. They have 4 kids, 4 children, but they weren't really starting to plan for their college education, right? If you come from a family of professors, my father was a professor. Education was a big deal, and it's still a big deal, right? So they really want their children to go to school and do well and eventually go to university. When they started working with us, we developed a tax plan strategy that now helps them save a little bit of money so that they can invest in real estate since his wife understands the market. And every year we target acquiring 1 unit at least per year, right? At this stage, they have a portfolio of 3 buildings that they have 2 duplex and 1 single family building, right? And real estate is great because it creates losses on paper, but when you do it well, you have cash, right, that you can use and reinvest. Okay, so this is to say that taxes are so important that can be a driver of your wealth, or they can be a barrier to your family's ability to build any significant asset that would benefit you, the rest of the family, and your future. Okay. The second example is from another client that was looking for a new professional. They didn't actually file their 2021 tax returns, even though they were clearly prepared. When they came to us, what they said was, I'm not sure that my accountant did everything correctly. The client doesn't understand taxes, but she just had a gut feeling. So I started reviewing the tax returns. As we review the tax returns, we realized that the accountant did not compute depreciation correctly, which caused the client to have a tax bill, an additional, I believe, $30,000 to $40,000 in additional tax bill, right? And when we recomputed the tax return and we calculated correctly the depreciation, she still owed money, but we were able to reduce the amount that for about $30,000, okay? And imagine having to pay $30,000 more on tax than you should have paid, right? Not a good place to be, even if you have so much money, right? So now that we work together, we give guidance into what to do, where to move, and how to manage the business, right? And the last example is from another client who's an immigrant like myself, who came to the US in pursuit of her American dream, just like me and many other immigrants come to the US, right? And she has an amazing taco business, but because she helps family back home, she had a little bit of challenge to start preparing for her own retirement, right? So again, we looked into her tax returns and we found areas we could help her improve and create a tax strategy that helps her save money. And then we helped her find a good retirement planner so that she can start building a retirement asset for her future retirement, right? So at the end of the day, what I want you to get from these stories is that when I look at taxes and tax returns, what I'm seeing is opportunities to help people's life get better, right? What the freedoms they are looking and the lifestyle they are looking. And if there is a way for us to help them get there, right? This is what you need to get about taxes. They can be a recipe for disaster, or they can be that bridge that you needed to get to start moving to the direction where you want to go in life. Okay. So I'll skip this professional story because of our time, but what really matters here is how we view taxes. When people come to our practice, one thing that I always help them understand is this. When you get a tax refund, not only from our accounting perspective, it's bad, and the time value of money, right? $1 today, it's better than $1 tomorrow because of inflation, right? And the opportunity cost of not having invested that money. We always want our clients to do well with their lives. That's why taxes are such a critical piece of that doing well with their life. Where we get our client is not to waste the tax refund they get, because one, it's already a bad decision to have a tax refund. I prefer to owe taxes so that I pay, and throughout the year use my money in different investments and directions that I want it to go. Okay. So taxes are about control, and you have to have control over taxes. Okay. If you don't control your tax planning, the direction taxes can take your life can be chaotic. There are people today that cannot get rid of their tax bill because every year they owe and they accumulate taxes, right? So you really need to make sure you are very active and proactive in regards to your taxes, okay? So to give me a little bit of some second here to drink a little bit of water, I want you to enter into the chat if you can, or the Q&A. Just let us know if you have filed your tax return or not. Just answer with a yes or no. All right. Okay. Some answers. Thank you for answering. So let's continue. Moving to the next session. All right. There are two things that usually your accountant should be sharing with you, and the tax organizer that helps you put together the information you need to get your tax returns filed. But before getting there, here's what I need you to do before even looking into your CPA or tax preparers, tax organizer. Last year, if you file tax return for the year 2022, you should have received a tax organizer. Yes? Yes and yes. Okay. I want you to open that tax organizer and see the questions and the answers you entered in this tax organizer, right? For those who don't know what a tax organizer is, it's usually it can be a software. My firm uses a software where you respond it online, but other firms use a checklist that will send to you in PDF or a paper document, right? And they will mail it to you, and then you'll respond and send it back to the accountant, right? Go over this question and the information you entered to see whether or not anything that you entered last year changed, right? If you had a new job, maybe your salary did change, so that's gonna be reflected there. Maybe you started new investments, right? You started investing in real estate or in the stock market, bond market, or you purchased a small business, or maybe you move to a different state, right? So having this information by going through what you had last year, it gives you a frame of reference of what potentially you should be sharing with your professional, right? So once you do that, you need to communicate with your tax professional, right? All of our meeting for all of our clients, we had them before the end of last year, right? So that we can check in, we know what we should be expecting at the tax season, any major changes. We do projections to see, okay, if you're gonna be owing, right? We need to know today so that we can start creating a payment plan for you to be able to pay when the taxes are due, and so forth, right? And then number three, I want you to set up a meeting with your professional, right? You pay them so that they can help you navigate difficult or major changes, right? And your focus should be on the tax implications of any changes in your life, right? Maybe you started a family, you got married, you're not sure whether you want to file a joint return or file merit filing separately, right? Or maybe you had a newborn in the family, or unfortunately you lost someone in your family, whether or not you need to file a tax return, right? So you need to have this conversation with your professional, right? One thing that I always advise people, right? Professionals are not people we should be afraid of them, right? Sometimes small businesses are reluctant because maybe, I don't want to pay more than I already am paying. You're seeing the cost, but you're not seeing the value. Last year, a client of mine came in, hey, I'm looking to sell my fleet of cars. Towards the end of the year, I was like, and in the call out, I told them, why do you want to sell? Or I asked them, okay, the business is not doing very well, but sometime we use 1 or 2 cars. They had a fleet of about 7 cars. So we started doing an analysis. What are the costs that whether or not you sell the business are gonna stay there, right? They're not gonna change. What are the benefits, right? Even if the business is creating loss, is this loss helping you offset other incomes in your business of your other businesses, right? Because the cars need to be depreciated, and the depreciation help reduce their taxable income, right? At the end of that analysis, she realized that she didn't have to sell the cars yet, because it could have created capital capital gain that are taxable. the depreciation taken on vehicles, there is a recapture rule, excuse me, that are taxed a little bit higher than capital gain, right? And she would have lost the net operating loss that the business was generating, but some of the expenses on her personal life that the business was actually shielding were gonna go away, right? When we put all these together and we gave her a number of the value of this business, even though it was generating loss on paper, she decided to keep the business. Okay, so if your accountant, your tax professional is not worth the money you're paying them, you need to have a conversation with them and tell them, I'd like to get a little bit more value. I'm in a stage in my business or my personal life that I'd like a little bit more advising. I'm happy to pay a little bit more for this, but I need you to help me. Okay? So that's point number 3. Set up a meeting, check with your professional to cover any major changes you had in 2023, okay? And their tax implications, right? Once you do that, you need to start assembling the files and information. January 31st was the deadline for filing W-2s, 1090s, and other tax documents, right? By now, you should have a W-2, a 1099 in your inbox, right? So start assembling your files. Brokerage should be sending all the brokerage statement soon, or probably some of the very good one already have that either on your email or your investment portal, right? So start compiling your files. A really good way to track all of your file, right, after your conversation with your accountant, create an Excel spreadsheet and make a list of all the items you discuss with your client. Another column for whether or not there is a corresponding document that needs to be provided to support that change in that took place in your life. Okay. Once you do that, right, create on the next column, create a timeline for when you need to have this information ready, right? So many people miss filing their tax returns on time because they don't have a system that helps them keep track of all the information they need to have by when, right? For some of the business clients who need to file Form 1065, which is for partnership, or 1120 or 1120S, corporation or S Corp, C Corp or S Corp, right? Oftentimes the deadline is March 15th, right? And I always tell my client, we need to have your complete information 2 weeks before the deadline, right? If we don't have it by then, we're gonna file an extension for you, right? Because we don't guarantee that we will get all of your stuff done on time. Because guess what? What we're trying to avoid is to make a mistake on your tax return. We need to have all the information, review them thoroughly, enter them into the software, tax software. In some cases, we need to do separate calculations and estimates. Sometimes you need to do some cleanup on the client's books. We need a little bit of time. Once everything is done, we need to review them, level 1 review, level 2 review before it's sent to the client, right? So make sure you're organizing your information, right? And number 3, you need to keep your information in a safe location, whether it's in the cloud, adopted two-factor authentication, if it's in your house or your office. It's ideal to be in a secured space in an encrypted manner so that your identity is not stolen, okay? Are we following here? Okay. We're gonna skip secret number 3 to a successful tax season, but I just want to throw here one important thing. Every business owner, even at the personal level, you should have a strategic meeting, right? What do you want your year 2024 to look like? This is not about resolutions, right? New Year's resolution, but it's about this is the vision that I had in 2023. How far am I moved towards this vision? How much did I accomplish of my mission, of my key objective? What's the operating budget that I have for this year, right? Does it support my vision? Is it still relevant to my vision? What are my expectations, my projections for this year and the next few years, right? Having this meeting, whether with yourself, your spouse, your friends, the people that matters in your life, it's so important and critical. And you need to document, right, everything that happens in that meeting, right? What you discussed, set up time to achieve certain goals that you have, right? And the plan for accountability, right? A lot of us sometimes can be pushed by different areas of our lives, but we need help sometime to staying on track, right? Is this making sense to all of us? Okay, just one moment here and we'll continue. Okay, so in summary, you reviewed your historical files, you reviewed your last year's tax return, you started assembling your files and information, and you had a meeting, if you haven't had one, right, to help you stay on track. Now, let's move into the 10 tax strategy that you can implement. Let me share my other screen here. I'm gonna move really quick on these strategies. Give me 1 second. I'll stop sharing my screen for a moment. Okay, let me know if you can see my screen.
We can see it.
Okay, perfect. So this guide we share with everyone who comes in touch with our practice, but it's really designed to give a high level view of 10 tax strategy that you can leverage, right? So if you are planning to start a business or you have started a business, or if you are looking to buy a business, right, there is the famous startup deduction, right? The startup deduction, there is a startup deduction and organizational tax deduction. And each one of these gives you up to $5,000 in a given year cap, right, to deduct right away, and the rest is amortized for 180 months. Okay, let me make this a little bit bigger, right? So when forming an entity, we recommend taxpayers to keep their startup and organizational expenses each at below $5,000. Okay, so this is number one tax tip. Number two, it's the home office. I'm working from home, as you can see, and I love the home office deduction because it helps you to reduce the portion of your home based on two rules, right? You have the $5 per square feet that the IRS gives you up to 300 square feet of the space you use for your home office, or you can deduct through the actual expense, meaning every expense you incur in the house, you deduct based on the percentage of the house you use for your business. Okay, so the guide also provide example to illustrate what the tax rule says, the general rule, and how you can apply it. Okay, the third tax deduction that you can implement in your life this year, 2024, so that in 2025, you can reduce your tax bill during the tax season, is healthcare. Generally, people are allowed to claim over any medical expense or healthcare expense over 7.5% of the adjusted gross income, right? So an example is if you earn $100,000 a year in adjusted gross income, this means that your medical expense only become deductible after you spend over $7,500, right? So anything below that, it's not deductible. So they are good ways if you are a small business or you have a side hustle, right, to take advantage of this rule to write off 100% of your healthcare expenses. Okay. The next one is vehicle. It's amazing. Most of us drive. If you live in Chicago, like me, driving, it's not really a good part of what we do. There is an amazing public transit. However, you can have your business cover things like when you go see a client, right, and get an Uber or a Lyft or whatever other transportation there to be paid by the business, right? So that can be a strategy to adopt here. But if you want to own a car, I have clients who is a financial advisor to very affluent families, and he has two cars, one car for clients who are of modest means, and he has a luxury car that he uses only for affluent clients, right? So that very expensive Maserati is deductible to him, right? He's driving the car of his dream and still taking advantage of the tax law, right? How amazing is that? Only in the US, these kind of things happen. Travel deduction, right? One amazing example I love using is one of my clients. His wife was so big into fashion, and she always wanted to go to Paris, right? So how do we make that travel deductible? She formed a business. She learned that there was a fashion show in Paris, and she could attend that fashion show. She made her dream come true, and the entire trip was deductible, right? The flight back and forth, the round trip, the hotel, the meals, uh, even her laundry was deductible because the tax code allows you to do that, right? Your meals are capped at 50% deduction, but there are certain specific situations where you can still deduct 100% of your meals. Depreciation is a big tax saver, right? Whether it's for vehicle or other fixed assets like equipment, building, and so forth, right? We're going really fast here because of time, right? I want to give you opportunity to ask questions, and you'll have this guide as well, right? Qualified business income. This allows you to take 20% off your taxable income, right? This is not applicable for people who only have a W-2. If you had a side gig or a business, 20% of your income under certain rules is not taxable, right? And these are the kind of topic that I'm giving you that you can go have educated conversation with your tax professional, right? Retirement saving. Let's say you make a little bit more money and you're not happy with the 7,000 limit on your IRA account, right? What can you do? There are so many options. There is even an option that I love that allows you to contribute over $200,000 into your retirement account by setting up your personal pension plan, right? So there is a lot that can be done. And this is just one of the best and easy to use tax strategy. If you help your family member with money, the best thing you can do for them is to hire them on your business or to pay them as independent contractor instead of just giving them free money. Okay. And that becomes a deduction to your business. But here's the amazing thing. If you have children under 18 years old, they don't have to pay Medicare and payroll, Medicare and Social Security taxes. Okay. You win, they win. And this is actually one of the strategy we help families who have children at certain age, and we start financing their education, right? So there is the state education accounts that you can contribute, but there are limits, right? In many of them, you can contribute up to 2,000. But when we adopt this strategy for clients, what we try to do is to have them pay their children below $12,000 per year and get this money and invest in profit generating asset, right? Or they can put it in a Roth IRA because they don't need to pay taxes on this anymore, right? Or they can buy property, real estate, and put it in rent. By the time their children are 18 and they need to go to college, they don't have to worry about how can I cost my children's education, because the last 10 years they pay their children and they use that money to generate wealth that now pays for their education if they need to. Okay. So this is a really great tax strategy. So we covered all the 10 of these, and you'll have access to this ebook. And I'm gonna stop sharing my screen one more time to go back into our slides. Okay. So, well, we already did dive into the ebook, okay? But there are other strategies that we're not gonna be covering here, but you need to know. That's why I recommended you to have a notepad and a pen to take notes, right? You can use a deferral of income as a strategy. Usually it works great towards the end of the year, or the acceleration of expenses, right? Business meals, this is really great at the end of the year when you're hosting employee events or you're hosting marketing events. You pay for meals for clients or referrals and so forth. You can also harvest net losses like my client, or harvest capital losses. This is usually good towards the end of the year, right? The poorly performing assets or stocks, you sell them and you harvest your loss. Excuse me, energy efficient taxes, right? Incentives, excuse me. This is also a really good one. If you purchase any energy efficient, energy saving asset, or you installed solar panels in your home, anything like that, there could be some tax incentives there, right? The beneficial ownership interest is not a tax strategy, but you need to know this, right? If you file, if you have an LLC, a C Corp in the US, you have to file this report with FinCEN. I can certainly, if someone needs to know a little bit more about this, please shoot me an email. I'll send you just a guide about what is this and how you can file it yourself, right? For C Corp client, transaction between business and the owners, this is really great. Instead of taking a dividend distribution, your business can lend you money at a reasonable rate, right? And that money is not taxable to you, right? Because if you are a C Corp, there is double taxation. Taxation on the entity and then taxation on the dividend to the owners, right? If you love to give to charity, by the way, SCORE is one of these organizations that provide really great value, but the way it keeps its lights on is by the contribution from everybody, includes the government, right? So if you want to donate, it's an organization I can vouch for because I'm also a volunteer and a mentor, right? Um, but there is a handful of, this is not necessarily tax strategy, but there's a lot of scam happening out there. When you get this link, please click into scams and fraud, or this list here. The IRS publishes every year a list of scams that taxpayers suffer, right? I would hate that you lost money because you fell under a scam or fraud. Okay, so go through this website and check. There are people who would send you a notice, appearing to be like a legitimate IRS tax notice, and they ask you for money, for payment, things like that. Check with your tax professional to make sure, it's legit before you take any action. Please, please, please. Okay. These scams have become so sophisticated that, sometimes we have to look at them, review them, and when in doubt, call the IRS or, the revenue authorities in Illinois or other states where the client does business. So watch out, watch out, watch out. Okay. Don't take this lightly. Got the IRS website, check these scams, okay? And the last topic in the last 3 minutes, right? It's how do you find a tax professional? This can be a question for you, right? If you don't have referrals from people you trust, I would recommend making a list of 3 to 5 professionals, right? Reach out to them and interview them, have a conversation to understand how they work, their credentials, their reputation, but make sure you feel comfortable with them, right? I love the airport test. If you were stuck with that person in an airport, uh, would you love that company? Excuse me. Um, it's important to really carefully vet your tax professional or even legal counsel or any professional you're trying to work with, right? Ask them really important question, right? What are their values? What are their ethics, right? What are their priorities, right? Can you reach out to them and expect to hear from them within 24 hours, or are you gonna be waiting for 72 hours and even after that, no one is gonna respond to you? Are they the type of professional who, after completing the work for you, are just gonna disappear and you'll only hear from them again the following tax season? If you have question about the work they did for you, can you contact them? How accessible are they? How well do they communicate with you? How well do they meet your expectation for a relationship with a professional, right? All these things are important and needs to be kept in mind, right? So I can also send you some of the questions that I ask professionals when I'm trying to hire a new professional, right? Last year, we were trying to buy a firm and we needed to hire an M&A attorney, right? So I prepare questions that I need to ask them. I need to make sure they really understand the area, right? Have they done similar work? If they haven't, maybe it's not a problem, but do they understand the space enough to the point that they're not gonna be a problem for me, right? Am I comfortable with them? I think at the end of the day, if we trust them, it could make sense. But if we don't trust them, it could be really difficult to work with a given professional. So I'm gonna pause here. It's 2 p.m. and I'm gonna open the space for Q&A. Okay. Let's just pause it here. Again, at the end, you'll get all the information that let me go back to number. Okay, which slide was it? Okay, you'll get these 3 resources, right? The booklet, the free accounting course, if you want to learn a little bit more about accounting for side hustle, and the free consultation, okay? We're giving you a lot of value, and it's deliberate. It's deliberate, and we want to help you, okay? So let us know if you have any questions.
Right now, I'm looking at the Q&A, and there are just 2 comments, actually. One was asking for your contact information, and that's actually provided on the screen that's up right now. And the other was someone saying that they didn't file their tax, I presume their corporate tax or their business tax return. So what would you suggest for that person?
They didn't file their tax.
Yes, Patricia, it may be
Can
that,
they clarify? Is it individual tax return, or is it personal tax return, and for what year? Is it for 2023 or for previous years?
yes. Patricia, if you could clarify your comment there, because that's all she indicated.
Okay.
Okay, and right now, there are no other questions in the Q&A. So you guys, if you have questions, please pose them.
Yep.
And while we're waiting, you were asking, whoops, more questions are coming in, but you mentioned that individuals can hire their family members if they want to give them funds. Is there a limit on the amount that they can pay them, or does it have to be fair market value? How does that work?
Could you repeat the question? Sorry.
Oh, I was just curious when you were
Mm-hmm.
talking about people, if they want to hire their family members,
Mm-hmm.
are there any conditions under which the government puts restrictions on hiring family members?
Restrictions, not necessarily,
Okay,
but guidelines, they are absolutely guidelines. Best practices, you always need to follow the rules of employment, right? You need to make sure there is an actual employment taking place, right? If you hired your son or daughter, you need to keep track of the work they're doing, the hours they're working, and you are paying them from the business account to their individual account, okay? Whether or not they have discretion on authority on that account and they need your signature, that's a different conversation. But you need to make sure you're keeping track of what you're doing. And there is an actual employment agreement, okay? If you want to provide benefits to them, by all means, you can do that, right? You can also hire your spouse. It's actually an amazing tax strategy, especially for S Corp business owners who have an S Corp, right? To deduct your own healthcare as a healthcare cost as an S Corp owner, it's a little bit tricky, but when you hire your spouse, you can provide them benefits that includes the entire family. And guess who's the entire family? Your children and yourself are part of the entire family, right? So it kind of circles back to including you, right? But there are a few other items there, but you need to make sure there is an actual truthful employment agreement. You're keeping track of the work and you are paying them a fair market rate, right? If you hire your child to be cleaning your space, organize the paperwork, you're not gonna be paying them $50 an hour in Chicago, right? You need to look at the rate similarly people in that position would be receiving. A good way to actually do that, you can just check um, companies that like staffing companies or employment platforms, right? So that you can see what's the average rate in your state for a given position, right? And maybe do a discount or a slight premium over what they are providing and justify why you made that choice specifically.
Excellent, thank you.
Mm-hmm.
Question, my 16-year-old daughter started working for commissions and tips in September. Does she need to file taxes on her own or is it added into the family?
It depends on how she made. But the answer would generally be yes. She would file her own taxes, but she can still be claimed on your tax returns.
And is there a dollar amount that since she didn't mention a dollar amount, is there a dollar amount that she should be looking at?
If you earn an income on your own, well, if you earn over $450, you need to file a tax return outside of your W-2, right? As an independent contractor, essentially.
Question, what is the difference between an LLC and an LLC election as an S Corp?
An LLC, it's simply, it's a legal structure, right? A good way to think about this, let me add maybe another slide here, okay? I'll duplicate this and just delete everything.
There's an addendum to that question if you want me to go ahead and ask it now.
Yep, go ahead.
The addendum is, if someone formed an LLC in December 2022, is it too late to convert to an S Corp or an LLC with election to be classified as an S Corp now that it's over a year later?
Okay, great. So there are two things that we need to get correct. Number one is legal structure. The types of legal structure is how you form your entity legally with the state, okay? You can form an LLC, you can form an LP, which is limited partnership. For professional businesses, you have professional limited liability companies or corporation, and then you have a corporation. Let me make this slightly smaller. Okay. These are your legal entities. Okay, the typical, now there are a handful coming up there. And then you have the tax structure, which is how you get taxed, right? LLCs are usually taxed. If it's a single member LLC, it's usually taxed as a disregarded entity, meaning it's gonna go into your form 1040, right? If it's a disregarded entity, again, meaning if it's a single member LLC, right? single member LLC. But if it's an LLC formed between two or more people that are unrelated, okay, you file Form 1065, which is a partnership return. Okay, an LP also will file a partnership return. A PLLC, it's gonna file depending on how many owners. It's either gonna go into the Form 1040 or Form 1065. And then a corporation will file Form 1120. Okay. So where does an S corporation comes in, right? S corporation is a tax election, right? You are one of these type of entities, and then you tell the IRS, hey, look, I am one of these entities, and I could be taxed as a partnership or as a disregarded entity or as a corporation. I am making the choice of being treated as an S corporation, right? I don't want my income to flow directly to my 1040, but I want it to go into a business type return, which is the Form 1120S. This is an election that you can make any time of the year, but to apply in that specific year, you need to file it before March 15th. And guess why March 15th? Because it's the deadline for corporate returns, right? So, but that doesn't mean, so going to the second part of your question, you can still file an S corporation election. The question now becomes, do you want it to start applying from now moving forward, or do you want to file it to start in the past moving forward, right? If you wanted to start, let's say in 2023, right, there is an election, there is a little bit of trick there, something that you need to add when you file that election request, but you're not going to have a reasonable compensation, right? What we do for clients, we don't just tell them, hey, make an S corp election, it's gonna save you money. We run an entity structure and tax structure assessment to determine which entity it's best for them now and in the next 5 years, at least, okay? Because every entity choice you make has a cost, right? Has benefits, but also have disadvantages, right? As corporation, you can only have up to 100 investors or shareholders, and all of the shareholders needs to be US citizens or US residents. You cannot have a shareholders who is not one of the two, okay? And there is your accounting also changes a little bit, right? And you need to reflect that. And you have to account for now starting to pay a reasonable salary to the owners who are running the business. And you have to account for a cost for filing the business return now, right? An LLC, if it's a disregarded entity, doesn't have to file these other returns. An S corp would need to file. So there's a lot of information going out there that it's purely just telling people, hey, make an S corp election. Actually, last year I had a client who came in, someone in their family was doing their tax returns, and they didn't know they had filed an S corp election a while ago, and they didn't file them. Guess what? There was so much bill for them, right? Because we needed to file their S corp, amend their tax return, file the S corp returns, and then amend their individual tax return. They had late filing penalties. So I'm gonna stop here and move to the next question maybe, but I hope it answers the question.
Uh, just to end that question, they wanted to know, does it make a difference on in what state the corporation was formed?
S corp is just a tax election. It
Okay.
doesn't matter where you, but what really matters is you need to look into the state. Uh, some states would tax S corporations. For example, us in Illinois, there is a small tax that S corporations pay, right? Other state may or may not have that. So it's really a matter of, cost benefit analysis to see if it's gonna get you where you need to go.
The next question, individuals started their business in 2021 and have yet to pay quarterly. We filed TurboTax in 2021 and 2022 and pay the whole amount at tax time. Is this an option or are quarterly payments required? How do you determine based on how do you determine how much to set aside? Is it 25%, 30%? And is there a way to set up reminders or auto payments for this?
That's a great question. Let's start with auto payment, right? For all of my clients, I have set up calendar invites that reminds them 2 weeks before quarterly estimate withholdings are due, right? So that we put together all the information, we calculate how much they will need to pay, and then a week before they are preparing their payments so that by the deadline, we're paying everything. An easy way for you to do that, that's it. Just set up a calendar reminders, right? 15 days before or 7 days before to remind yourself 3 times per day. Maybe you'll miss the first reminder. Maybe your cell phone was off. 3 reminders. Okay. How much you need to pay? The general rule is if you make below 150,000 in adjusted gross income, you need to plan to pay 100% of your last year tax bill. Okay, just think about what was your 2022 tax bill, or in this case, right? 2023 tax, if you file your tax return, your 2023 tax bill, and pay the same, divide that by 4 and pay each quarter of 2024. But if you made more than 150, the general rule is multiply your last year tax bill by 110%, right? A factor of 1.1, and divide that by 4, and that's what you need to be paying, right? But sometimes your life situation can drastically change. Suddenly you expect to be making more money than you were planning. Your investment suddenly just took off, right? Meet with your accountant so that you can actually compute your quarterly withholding payment. Does that make sense, Jenny?
She'll respond. And Anonymous returned with another question regarding the S Corp and just following up to find out whether the amount of time it takes. A few weeks, a few months, how long does it take to grant business?
Unfortunately, I don't work for the IRS. Like I wouldn't know, in general, what we usually do, even when we are like in a given year, I can file like 5 to 10 S corp for clients, and the IRS, they have been times that they were underfunded so deeply that it took them months before they could respond. And in some clients, they're provided an answer immediately, within a week, 2 weeks, or within a month, right? like I just wouldn't know how long it would take. But the most important is if you are filing an S corp with your return this year so that it becomes effective, right? You can send it and the IRS still considers it.
And Jenny followed up with, it sounds like you're saying quarterly is required and that you cannot choose to do it yearly. Is that correct?
The reason I recommend quarterly and not yearly, it's because of the size of your potential tax bill, excuse me, right? It's easier, or I find it easier to pay little bites of my tax bill than to just get 20, 30,000, give it to the IRS at once. Does it make sense? But if you prefer to do yearly, by all means, nothing stops you. Okay. But the tax rule says quarterly estimate, you need to estimate your quarterly payment if you are a taxpayer, especially a business owner, right? Uh, if you are a W-2 individual, you have an employment, your tax is already being remitted to the tax authorities. You might not need to do another quarterly estimate unless you want to give the government more money so that you can have a refund.
Okay. Anonymous and Jenny are following up on their respective questions. Let's see here. Anonymous was asking if it's impossible to become an S Corp for year 2024 to file by the March 15th timeline.
Is that a
And
question or a statement?
it looks like a statement. Then the second follow-up is if we're a digital nomad to travel in and out of the US. They travel a lot. They use Airbnbs, motel, hotel locations in different cities. How do they find a tax preparer that can account for all of these?
If you follow our recommendation at the end of the presentation, this is the best way for you to go. Make a list of 3 to 5 professionals, interview them, see if they can deliver on what you're looking to, if they can deliver on the type of solution you're seeking. And from there, you make a decision.
Okay. And Jenny has another question, a follow-up. Will
Mm-hmm.
they get extra fees if they file yearly?
I wouldn't say fee. I would say it's interest, right? And it also depends on what else you're not doing right. Yes. So the deadline to pay your taxes as an individual taxpayer, it's April 15th, right? If by April 15th, you do not pay your taxes due, then you start accruing interest. If you didn't file your tax return by then and you didn't send an extension, then you start accruing late filing penalty on top of the interest on your tax due. Does it make sense?
It does to me, but I don't see a follow-up at this point. Oh, wait, let's see here. Okay. Anonymous was asking for health practitioners considering accepting cryptocurrency and or starting to accept health savings accounts. Does extending these new payment methods complicate taxes, and what kind of accountant do they need to hire?
A tax preparer would be your accountant, but more than that, you really need to have a bookkeeping throughout the year as well. Yes, it brings a little bit of complication, but if you find the right person, there is nothing that they can't help you with. Of course, they need to understand the intricacies of your unique situation. That's what I would say.
Okay. That is it for questions for the moment.
Very welcome, Jenny.
Okay. Okay. I don't see any further questions unless someone else has additional questions. Whoops, let's see here. Anonymous says thank you as well.
Very welcome.
Um, so I think that is it for the moment. Wait, let's see here. Okay. So any final comments to the audience?
Well, we have about 5 minutes left,
Mhm.
and here's what I would like you to really take as a major takeaway. If you want to avoid the headache around this tax season, if you haven't filed your tax returns, right? Please make sure you're following this advice. Go through your last year tax organizer, review it, review your last year tax return, um, and start early communicating with your tax professional, right? Whether you use TurboTax or um, other CPA firm like similar to my firm, start the conversation early, especially if there are new situation in your life that may have tax impact. Communicate this, okay? And um, if you weren't happy with your professional last year, don't wait until March to start looking for a new professional, right? Start early, talk with people um, in your network, ask for referrals, um, and go online, look into your local accountants or chamber of commerce, but make sure you're speaking with people. And yes, the slides are available. Um, my firm is taking clients, but I'm not saying this because I want, I want you to come to my firm. I really want you to interview people, right? Even if you decide to come and speak with us, uh, we both need to be a good match for each other, right? You need to make sure you're comfortable with who your service provider is, and they are actually capable of producing the result you are seeking, right? And make sure to talk to people, interview them, ask hard questions. If you need my help with some question, just shoot me an email, okay? Shoot me an email. Hey, Paulo, could you share some questions that I should be asking I'm looking for a new accountant that I should ask uh, in the call. I'll give you some ideas, okay? I'm gonna pause here. And if there isn't any other thing, I'll turn it back to Toya. Thank you for coming and for attending. We appreciate you and your time. Uh, if you recall another question after this conversation, shoot me an email. Happy to help and to answer in any way that I can.
Okay. And I'm going to repeat that we're lucky enough to have him as a volunteer mentor with SCORE. So if you are interested in getting either Paulo as a mentor or need some assistance with something else, please feel free to reach out to us as an organization at score.org and submit a mentoring request. Also, We love volunteers. So if you are an expert in your field and you're willing to help others, please feel free to join us as a volunteer mentor. Again, go to score.org and click on the appropriate tab. We appreciate your time. And once again, this has been recorded, and we are going to share the recording and the slides. And you've got the contact information right there. So reach out, because he is the friendliest person and so willing to help people with those questions. So thank you, guys. Thank you again, Lantadilla.
Thank you.
All right.
Bye-bye, everyone.
Bye, everyone.